stocks, crypto, credit moves. Good morning, YouTube. Back for another quick video. We're going to discuss selling covered calls or selling calls for income. Just need to start off by saying I'm not your financial advisor. I'm just sharing strategies that I use to generate cash flow, passive income for myself. So anything I say here is just for entertainment purposes. Just going into what I like about selling calls. I personally think it's the safest strategy and options. The reason why I say that is because in order for you to be able to sell a call, you have to own 100 shares of the company in order to sell one call. So to me, it's safer because you're selling something that you already have. So, in my opinion, you have a 66% chance of winning with this strategy. And I'll go into why I say that and why I like it even more. But the bottom line, you have to have the shares and you get paid a premium by selling the calls. So this, in my opinion, this is similar to owning a property. You're owning stocks and you can treat them like rental properties. You can rent the stocks for income. So let me go through a quick ABS News and Research. So they're actually talking about selling calls. In my 25 years of following the market, selling calls for income is one of my favorite things. Yeah, this isn't new. It's one of the oldest strategies on Wall Street. Is how they often pay their investors, especially when the stock market is falling. Selling calls become a lot more profitable because as an investor, you're able to collect a premium. So you're getting paid a premium by the call buyers, what I discussed on the other video. So the call buyers are giving you a premium in order to buy a stock at a specific price. Another thing I like about selling calls is you actually are the dealer. You're the house dealer in Vegas. You set the rules. You set the strike price. You set the date that their contract expires. So they're playing by your rules. It may not be one of the sexiest things to do, but it creates income. While a good cover call strategy, you can make hundreds, if not thousands of dollars every month on your investment portfolio. The other thing is exciting is that trading options when you are selling, they are not as risky. That's what I like about it. They're not as risky as buying the options because you already own the shares. Cover call requires you, the holder of the shares, to sell a call option. When you sell a call option, the buyer of the contract gets the right to buy the stock at a strike price or agreed upon price till the agreed expiration date. So let's go into Robinhood and give an example on a stock that I own. I have a lot of shares of Prog. I haven't been selling calls on Prog lately because the market's kind of been in a down, but it's starting to come back a little bit. So I might consider selling calls on Prog. And two reasons that you actually would sell a call: if you feel that a stock may fall in the short term, it's a good strategy. So let's say like right now, Prog is trading at $1.73. So let's say on Monday, let's say if Prog runs up to $3, and let's say I don't want to sell the stock at $3 because I don't want to pay the taxes on my gains at that time. What I could actually do is sell a call. But let's say if I want to sell a call at $3.50 and Prog is trading at, let's say, $3. the value in selling a call is I'm actually setting the strike price that I actually would not mind losing this stock. So let's say if I have let's see here. Shares. It's not letting me. Trying to actually add more than one contract in there, but it's not letting me for some reason. Total credit. Okay, maybe I don't have any shares here. But anyways, let's just get back into this. So for every call I own, the reason why investors sell calls is because income. And a lot of investors don't even know you can make income off stocks you hold. So let's say here, for every call I sell on Prog, every 100 shares I have, I can make, what's that? $21 a call, because it's 21 cents times 100 shares. So it'll be $21 a call. Let's say if I have 10,000 shares of Prog. So I can sell a call and I'm going to collect $21 a share. So if I have 11,000 shares, that's going to be $2,000. Yeah, $2,000. So I will collect the premium of $2,000, and I keep that as long as Prog stays above the strike price, below the strike price that I select. And the only way I lose my shares is if Prog runs over the strike price I select. So that's why I say it's a win for the most part. You win because you keep your shares. You win because you keep the premium. And you only lose if the stock runs over the selected strike price. That's why call options are my best trading strategy. I like it the most because I feel like I have more control over the shares and where I lose them at. And if you're getting into selling calls, you can't worry about losing your shares, or you just go back and purchase them again. So this is by far my favorite option strategy, is selling calls, because I'm selling calls and making income on stocks that I'm already holding anyways. So if I'm going to sit and hold them, I might as well make some income off of them. So I wanted to go into calls, why I sell calls, why they're valuable. The only downside to selling calls would be is I'm limiting my upside. So regardless, if I set a strike price of $350, regardless of how high Prog goes, I'm not going to get any of those gains. I'm locking in my gains from the beginning. I'm limiting my upside, but I get to keep the premium. So it's a way to make income off the stock market, is through selling calls. So I want to stop there for today. I'll cover calls again later in other videos. If you have any questions, you can leave comments in the comment section. Like, share, subscribe. Until next time, signing off.